Interest rates are on the rise and causing some serious stock market disruptions in the process. Is it a positive or negative, and how does this affect the average Arkansan? We have Sean Barron from Delta Trust and Bank here to break it all down for us. Sean, good morning to you.
Okay, thank you.
Thank you for being here. First of all, what do you think is contributing to these rising interest rates?
The Fed came out earlier this year, this quarter, and said that they were going to cut back on quantitative easing 3. And basically just taper off the amount of bonds that they were purchasing. They were purchasing about 50% of new issuance or more for the treasuries so far this year, and they're going to start tapering that, maybe end it by mid-June or mid-2014. So taking them as a major buyer out of the market kind of caused rates to rise.
Our automatic first thought is this is probably not a good thing. Is it a positive or a negative? How do you feel?
It's a positive, I think. It means that the economy can stand on its own 2 feet now, or at least the Fed thinks it can. They're not taking money out of the economy, they're just putting less money into the economy. And I guess it depends on whether you're a saver or a spender as to how you interpret the actions and how it benefits you or not.
And then also, yeah, your thoughts on how this affects the average Arkansan. I know you work with a lot of Arkansans.
Yeah, we invest money, so when interest rates rise, it's better for our clients because we get a higher return for them. The Fed had been buying so much issuance that it was artificially holding interest rates low, and it was creating bubbles in the Treasury market. It was creating some, we had people come to us that were wanting yield, and they'd be stepping out and taking on more risk in different areas of the market to get that yield that probably they were over purchasing and overpaying for certain things. And so to get the Fed to kind of pull out of the market a little bit, normalizing interest rates and all the rates that surround that and are built off of that is probably a good thing, unless you're a borrower, and then your interest rates are going to rise on what I think mortgage prices have already gone up about 1% across the board. So if you were thinking about buying that house, you're probably a little late.
A lot of people
also,
yeah, a lot of people also probably wondering, how long is this trend going to continue? Yeah. Any idea?
I think the market probably overreacted to the initial, shift in stance by the Fed. I don't think that we're going to have a long period of rising rates that begins today. We'll probably have some normalization. It may drop back a little bit. I'm not really a great market timer, but I don't see rates going much higher from here in the short term. So I don't think there's any cause for panic for the buyers or the spenders. So. And
then one last question for you this morning. How do you think that this impacts someone that's concerned with saving, like a retiree specifically?
Right. It's a good thing. They're able to get a return above inflation by being in safer assets, and they haven't been able to do that in a while. They've had to take on some kind of risk, and they either take on risk by going out on the yield curve and purchasing longer maturity bonds that give them a higher interest rate. The problem with that, and if they've done that, they'll see on their statement this month, is when interest rates rise, the value of those bonds drop substantially, and they'll think they're in safe assets, and then you'll get the call that, hey, why did my bonds drop in value so much? So we try to warn clients away from that for a long time, and but now there is some actual pockets of value out there that there haven't been in a while. So it's probably going to be a good thing for the savers, for sure.
All right, some good information. Thank you so much, Sean Barron. Good to see you.
Thank you.
We appreciate it. If you want to talk with Sean and get more information from him, we have his contact information. If you are concerned about these rising interest rates, there it is. Your time is now 5:54. Stay with us. You're watching THV 11 this morning.